Hello, welcome to Brainfood Bytes. I'm Mary Kay Foss, CPA, and today we're going to talk about Trump accounts. So Trump accounts are part of a new section of the Internal Revenue Code. It's Section 530A, and this was part of the OBBBBB law that was passed in July of 2025. Now, these accounts are not effective until 2026, and they're for an eligible individual, which is a child, age 18 or less. We call them the account beneficiary, and they must be a U.S. citizen with a Social Security number. It's very much like an individual retirement account, and I know you know a lot about individual retirement accounts, so this is going to be pretty easy, I think. We're going to talk about contributions, eligible investments, and distributions. So it's like an individual retirement account. So that is this in the same manner as Section 408 little a, because 408 capital A is for Roth IRAs, but this is little a, like your regular pre-tax IRA. But there's no distributions before the year the beneficiary reaches age 18. So that means if the child, let's say, has a birthday on November 25th, and in the year that they turn 18, they don't have to wait till November 25th for a distribution. They could take a distribution on January 1st of that same year. Rollovers are allowed. They're qualified before age 18. No restrictions after age 18. We'll talk a little bit more about that. Section 72T penalties apply. Section 72T penalties are a 10% penalty if money is taken out of an IRA, including this Trump account, before age 59 and a half. And since these are for young people, I think we're going to need to know about the Section 72 penalties or be aware of them. So there is a pilot program, and this is Section 6434, and it says that $1,000 can come from the secretary. Whenever legislation says the secretary, that means Secretary of the Treasury, and that means the IRS. So for those born in 2025 through 2028, there is $1,000 available to put into their Trump account. Parents can contribute $5,000 per calendar year. That's the amount for 2026 and 2027. It's going to be indexed after that. The employer can contribute up to $2,500 per year per employee or dependent. That's going to be indexed after 2027, just like the parents. The employer amounts are pre-tax. There's no basis created, and that counts towards the $5,000 annual contribution. So if the employer puts in $1,000, the parents can only contribute $4,000 that year. A charity or a governmental unit can contribute. So that kind of was a surprise to me at first, but we heard more about it with a press conference that happened in December. So the Secretary of the Treasury spoke at this press conference and talked about the 4 ways that the Trump accounts will be funded. So first, there's the pilot program, and that's for those born January 1st, 2025 through December 31st, 2028. Funding through parents, friends, and employers. We talked about that. Up to $5,000 per year combined from that category, parents, friends, and employers. Funding through philanthropists and charitable organizations. So the Dell Foundation made a large gift, and I'm going to talk about that in a second, but I also wanted to share that investor Ray Dalio was brought up at this press conference, and he has joined what the administration is calling the 50-state challenge. So that's a special initiative where they're trying to get the philanthropists around a common cause to put money into these accounts. So each philanthropist could select a state, I guess, or more than one, and put some money into the accounts for these children. Also, funding through state governments. The administration has been working with some governors to see if there is a way that they can have the states make some contributions to these plans. So here's the Dell Foundation gift. The Michael Dell's foundation will contribute $250 each to a number of Trump accounts. In total, they're giving $6.25 $250 million to these Trump accounts. The Dell gift extends to children up to 10 years old. I was afraid it was going to be just for the newborns getting the $1,000, but it's also for other young children. But the eligibility is limited to those who live in a zip code where the median household income is below $150,000. So here's some more details about the contributions. Each contribution must be made by year end. I compared it to a regular IRA where you have until April 15th after year end. Not with the Trump accounts. You have to make the payment by December 31st. Contributions can be made to the Trump account and traditional IRA for the same person. Some people start working before age 18. I know I did. Employer contribution reduces the amount that the parents can contribute, and then it's that $5,000 limit for 2026 and 2027, and then inflation will increase it. So how do you elect the Trump account? Well, you have to file a Form 4547. And we understand that form can be attached to the 2025 Form 1040. And on that form, you're going to elect to create the Trump account. And if somebody qualifies for the pilot program, that $1,000 contribution availability will also be elected on the Form 4547. I am going to show you a copy of the draft Form 4547. There are draft instructions. You can find it well. Now, the participation in the Trump account is not mandatory. An election is required. I really think it would be available to a lot more children if this was something that you were able to opt out of instead of making an election to participate, because I'm concerned that many of the families where this would be very beneficial are not going to make the election because they're not going to be required to file a Form 1040, or they're just not going to know about filing the form. So here is the form 4547 Trump account election, and you can see that this form is for 2 children. And you can also attach additional copies of the form if you have more than 2 children that qualify. And down at the very bottom in part 3 is where you check the box for the $1,000. And then you have to sign the form here. If you or one of your colleagues prepare the form for the family, then you would be signing it also as the preparer. Now, here's the eligible investments. So the money in these Trump accounts has to be invested in a mutual fund or exchange fund which tracks a qualified index. There can be no leverage. That means no borrowing within the plan. They have to have very, very low fees. And the Secretary of the Treasury can, which means IRS, can have other appropriate criteria. And then they have some definition of what a qualified index would be. Now, as I mentioned, these are not effective until July of 2026. And so this is going to give the wirehouses and potential trustees additional time to design some funds that are going to work just perfectly for these Trump accounts. Now, money market funds and cash are not qualifying investments. So ordinarily, when you put money into an IRA, you put in cash, and then you decide on how it's going to be invested. Well, the Trump accounts have to be fully invested right away. So this is going to be something that the trustees and custodians are going to have to work out. The trustees have to monitor to continue to make sure that the investments continue to qualify. Because if the fees go up, that's going to disqualify that investment. And if they change what they're going to invest in within that index fund, that could also disqualify the Trump account. So let's talk about the distributions. No distributions before age 18, no hardship distributions. With a 401k plan, we have hardship distributions. If somebody really needs the money before age 59 and a half, that's not going to happen here. Section 72 applies for taxation. I mentioned 72T is the penalty, the 10% penalty, but Section 72 is the section that tells us how we pay tax on an annuity where we have some basis. And so basically we use the Section 72. This is the same thing we use if we have a non-deductible IRA. But when we're looking at the basis, it's only going to be money that comes from the parents that's going to be considered basis that will be recovered and reduce the amount of the distributions that are taxable. Rollover allowed in year the beneficiary turns 18. Again, you can do it in January. You don't have to wait until the birthday. Qualified rollover, that's if there's a trustee transfer to another Trump account. You know, like with 529 plans, sometimes some accounts are more popular than others. And so if somebody wants to move their Trump account to a more popular version of the Trump account, 100% of the funds can be moved over, but has to be reported to the IRS within 30 days, which is pretty quickly because generally the transfers aren't reported until by January 31st of the next year. If our beneficiary unfortunately should die before age 18, then it's going to be the entire account will be taxable on their final 1040. Of course, if there is some basis, that will be taken into account. So here's this age limit. You have to be under 18 for the Trump account. There's no age limit on a traditional IRA. No age limit at the bottom, no age limit at the top. Earned income, not for the Trump account, yes for the IRA. Investment restrictions, yes for the Trump account, no for the IRA. Withdrawals, not until past age 17 for the Trump account. You could do them for the IRA. And you can do a rollover or Roth conversion when you're greater than 17, and you can do that with an IRA. That 72T penalty tax, that's a 10% tax, but there is no penalty tax if the funds withdrawn are used for higher education, and that higher education is paid for in the same year as the withdrawal. There is also amounts can come out of the Trump account for a first-time home purchase, so that's not just for the beneficiary, but it's for family members, and up to $10,000 of a withdrawal can be used in that way with no penalty. So that's our story about the Trump accounts, and so stay tuned for more episodes.